Hi, this is James Shug with Westpac London's end of day report for Friday, April the 12th. Well, just when you thought it was safe to step back into the Mediterranean, the sharks that are Cyprus have come back to threaten to bite us, with markets down very sharply on the news that the Cypriot bailout is going to require another €6 billion on top of the 17 billion that have already been set aside, 10 billion from the IMF and the EU, 6 or 7 billion from Cypriot bank depositors, and another 6 billion from, well, we don't know yet, partly from gold sales from the central bank. The rest it needs to be raised by Cyprus itself, according to the EU, who aren't prepared to stump up any more cash. Remember, the Cypriot economy last year was worth about 18 billion euros, just less than that. So the 23 billion bailout that's required to meet the needs of the Cypriot creditors, that works out at, well, what's that? Well, well over 100% of GDP. I think it's something like 100, what is it? About 150 odd percent of GDP. So it's a difficult task, and it's come along with the news that Portugal and Ireland have had the terms of their bailout loans extended by 7 years by the EU finance ministers meeting in Dublin. So a little bit of leniency does seem to be creeping into the austerity bailout mix, although excuse me, no further leniency towards Cyprus just yet. For what it's worth, our view is that probably by the end of the year, and certainly after the September 22 federal elections in Germany, we might see a substantial write-down of not just Cypriot but also Greek debt by the public sector in the rest of Europe. That'll be a much more substantial fiscal transfer, effectively, but something that can't happen until Merkel has had her election, well, has been re-elected. As I say, that's on September 22. That's the current date for the federal elections in Germany. So other news today wasn't helpful. We had retail sales figures in the US. We saw a 0.4% fall in March. That's the second fall in 3 months. Even the core component, when you take out auto, the first fall on that component since I think it was well, September, October last year. So the weaker retail pictures that started to emerge in the US, that combined today with a sharp fall in consumer sentiment on the April preliminary reading from the University of Michigan. And producer price figures came in at minus 0.6% as well, mostly due to lower gasoline prices. In Europe, we had industrial production up 0.4% in February, but the January number was revised to a steeper fall, down 0.6%. And the annual pace of decline in industrial production in Europe is, let's see, 3.1%. That's the second steepest pace of decline since the end of recession in back in 2009. So although the numbers might look good in isolation, the modest rise in February, the underlying story is still very weak. Just for the interest, the main economies in Europe, Spain is looking at a 6.5% annual pace of contraction in its industrial sector. Italy's down 3.8%, France down just around 3%, and Germany down 2.5%. So broad-based industrial sector losses across Europe, despite that monthly gain in February. So they're the main news points today. We've had some earnings results come through from the US banks. The earnings season's continuing there. It hasn't been enough to turn markets around, and as I speak, just at the end of European trading, we've got the London market down 0.5% today. French market's down 1.2%. The Germans are off 1.6%. And there's losses of around 1.5% in the Spanish and Italian markets, and the Dow's off about 0.25% at the moment. It's at 14,829. Commodities have taken a real shellacking today, with gold off almost 4%, $1,504 an ounce. Oil's down more than 2.5% at $91.10 a barrel, and copper prices are off about 2.5% as well at 334 cents a pound. And the Aussie dollar's down too. It's just over 1.05 against the US dollar. having traded comfortably above 1.055 earlier today. It's taken a bit of a hit in line with the increase in risk aversion that's marking the end of the week after a period of relative calm and risk appetite returning earlier this week. That's about it for today. I'll be back again next week, but not until Wednesday, as I'll be out of town on Monday and Tuesday. Okay, I look forward to speaking to you then.